the sector has seen funds explode. They're looking at over 8 trillion now, the highest it's ever been. It's an all-time high. And we're also seeing something similar for our treasury platform. And the purpose behind that is to, again, it ties in with empowerment. It is to allow financial institutions, corporates, manage their money market funds through a tech platform. Now we have a provider and a fund manager behind it, an established institution. But the fact that now you can achieve and earn good yields on cash in a risk-free environment has brought this opportunity to many corporates, many financial institutions, and they're making good use of it. And through our platform, through that digital lens, it's enhancing and empowering the financial institution, the corporate, through data, through ease, through that seamless UI UX. And it's tying in very nicely with that economic environment, which we are seeing, over 8 trillion in managed money market funds. And now, it comes into question, if you've got cash on your balance sheet, are you going to get the same ROI if you invest over in one particular way, or where you actually park your capital is very competitive now, considering you can achieve such a good yield on your cash and a risk-free rate. How are you thinking globally in how to attract customers in different countries and different continents?
Yeah, no, it's a really good question. It's quite timely. So traditionally the way our product works is that we provide direct access to the asset. So an individual investor invests and they own a collection of wine. The bottles, the cases, they belong to that individual, has flexibility about when they want to, sell those wines, when they want to buy more, and they actually have title and ownership of them. They can drink them if they want, which has been great. And it's been a fantastic way to build a business. I think there's an area of the market that hasn't quite, no one's quite landed it right, but I think it's the next big evolution of the fine wine market, and that's having a proper institutionalized product. So we're in the process of launching a regulated vehicle in the US under the Reg 506D. So it'll be open to accredited investors, and we'll also be working with distribution platforms around getting that product distributed. And the reason for that is that twofold. One, that I think that for us, it sort of, if it's successful, I think it showcases the sort of maturity of wine as an asset class. Second of all, I think that there is a whole wave of capital that isn't available to us right now in the way that we currently structure the product. So it's a great way for us to increase our distribution and become more available to more investors. And the third thing is, I think that one of the things we've learned in the US over the last couple of years of doing business over there is that, it's a very financially savvy market. And as you go into different markets, whether it's the business we've done in Asia, the Middle East, whether it's the UK and now North America, you sort of get a feel for the way that people like to invest. And I think that, again, I mentioned this earlier around sort of wine being an alternative asset that's a bottle of wine that sits in a warehouse. To a certain extent, I think there are some markets that sometimes can't quite get comfortable with that as a concept. I'm going to give you a big chunk of money and there's going to be some wines in a warehouse somewhere. Understandably, I think there's an element of people not quite being able to get comfortable with that. So I think when you can create a wrapper or a vehicle that has that regulatory structure to it, where that gives almost to a certain extent the investor an element of security around the product they're investing in. It doesn't really matter that it's wine in a warehouse. I know that I'm going through a structured product that's regulated, therefore I feel more comfort, more security about going into that asset class.